Welcome to the deep dive. This week, well, you've sent in some really interesting sources, all zeroing in on how these newly announced tariffs might shake things up for the construction industry.
Yeah, it's definitely a hot topic.
So our mission today is pretty focused. Let's try and get beyond the headlines, really understand the potential risks, for construction projects down the line.
Sense.
The big question we're tackling, I guess, is will these tariffs actually lead to a slowdown? And what are the key factors we really need to be watching here?
Exactly. And we've got quite a mix of info, haven't we? Everything
Oh,
from the specifics of President Trump's tariff announcements to what experts actually in the construction sector are saying.
right. Plus the economic
The
data.
rest of the data. It's definitely a complex puzzle.
Yeah.
And figuring out how all these pieces fit together, well, that's going to be key.
Okay, so let's start by maybe drilling down on the tariffs themselves. The announcement, as we understand it, was pretty broad, hitting imports from over 180 countries, with a sort of baseline tariff of 10% for all U.S. trading partners.
Yeah.
But then there's this other layer, right? These additional reciprocal tariffs being discussed.
Yeah, the 34% on goods from China and 20% on those from the European Union. That's the talk.
Okay. Now, what seems potentially significant, especially for construction, is this reported list of exemptions from those reciprocal tariffs.
Right. According to the White House release, things like steel, aluminum, lumber, and copper are supposedly off the hook for those higher retaliatory duties.
Which, at first glance, that might sound like a bit of a relief for the industry.
You'd think so.
Well,
But hold on, because it's not like construction hasn't already been dealing with tariffs on these exact materials.
yeah, that's a really crucial point. Our sources remind us we've had that 25% tariff on imported steel and aluminum since, what, March of last year?
Correct. And the 14.5% on Canadian softwood lumber, that's been around too.
So even if these new reciprocal tariffs don't apply to those specific materials, the cost landscape, well, it's already shifted, hasn't it?
Precisely. And this is where you immediately see the concern about material prices just, well, getting worse.
Okay.
Anirban Basu, from the Associated Builders and Contractors, he's pretty clear he thinks we're likely to see further price increases in the coming months.
And he points specifically to iron, steel, aluminum.
He does. And notes that domestic steel prices have already jumped significantly. So the question becomes, if imported steel gets even pricier because of those existing tariffs,
Right.
can domestic production really fill the gap? Especially when you think about capacity or maybe the specific types of steel needed for different jobs.
That's a really good point. Now, we also heard from Tim Jed at DPR Construction. He had a slightly different angle, didn't he? Highlighting domestically sourced stuff like concrete and gypsum.
Yeah, suggesting maybe those won't face the same direct hit from the new tariffs,
Okay.
which is true in terms of a direct tariff. But Jed also raised a really critical point about how interconnected supply chains are.
Ah.
Even if the main thing, like concrete, is domestic, what about the components used to make it? Are there imported parts or materials in there?
Good question.
If so, those could still get hit by tariffs, leading to sort of indirect price hikes or even delays in getting the final domestic product. It's like a ripple effect.
Yeah, you can see how that would work. And the data, I mean, it really backs up the pressure that's already there on prices, doesn't it?
Absolutely.
Non-residential material prices were climbing at, what, a 9% annualized rate early this year?
Yep. And looking back further, overall construction input costs are up. It's a staggering 41% since February 2020, according to ABC.
Wow, 41%. That's a huge increase the industry's already had to absorb.
It really is. So with those kinds of increases already baked in, the next logical question is, okay, how does this affect future projects, future investment decisions?
Exactly.
And Janine Cataldi at S&P Global Market Intelligence, she suggests that, yeah, the uncertainty in these rising costs could lead to a slowdown, particularly for privately funded non-residential projects.
Right, where developers might have a bit more flexibility to maybe postpone things or even cancel plans if the numbers don't look right anymore.
Precisely. If you're looking at a new office building, a retail space, and suddenly your costs have this big question mark hanging over them, you're going to be more cautious.
Makes sense. And Cataldi also emphasized, didn't she, that the impact might not be immediate, like projects already underway will probably keep going.
Yeah, it's more of a lagged effect. It's those future spending decisions, the ones being made now or in the near future, that are most at risk.
Okay. And this is all happening even though non-residential construction spending actually hit a record high back in February, right?
Right.
$1.26 trillion.
It did. But, and this is really important context from the ABC analysis of Census Bureau data, that growth was largely driven by public construction projects.
Ah, okay. Which then brings us neatly to Cataldi's other concerns about whether that public construction momentum can even be sustained.
Exactly. She raised some critical points. Things like potential funding recalls, rising material prices eating into tight public budgets,
Right, if the money doesn't go as far.
and even the impact of immigration policies potentially tightening the labor supply. It really raises the question, will these public projects continue to have the resources and the workers to keep going at the same pace?
Hmm. Which brings us to the labor market itself. That seems like another major piece of this puzzle.
Definitely. Our sources point out that economists are watching hiring rates very, very closely. It's a key indicator for the industry's health.
And Basu from ABC, he voiced a clear worry, didn't he? That if these reciprocal tariffs actually lead to construction layoffs.
Yeah, that it could drag down the whole economy, not just construction.
And then Michael Gux at Construct Connect added another layer to the labor issue, a really critical one.
He did. He's worried about the labor force potentially shrinking because of increased deportations of unauthorized workers.
Right. His point being, if you remove a significant chunk of the workforce, suddenly labor costs could become the biggest headache, maybe even bigger than materials.
That's the potential scenario he's outlining, yeah. You could end up with labor costs really spiking.
Are there specific skilled trades that might be, more vulnerable if that happens?
That's a really important follow-up. You might see particular pressure on trades that historically have relied more heavily on immigrant labor.
Yeah.
So maybe things like framing, drywalling, general site work, areas like that.
Okay.
If the labor pool shrinks there, you could see not just rising wages, but real project delays, just because you can't find enough workers.
Wow. Okay, so lots of potential headwinds. But thankfully, it's not all pointing downwards, is it? The sources did identify some areas where activity might stay strong.
That's right. Basu specifically mentioned data centers and manufacturing construction. He thinks those sectors are likely to keep growing robustly, sort of regardless of these tariff issues.
What's driving that resilience, do you think?
Well, often it's just really strong underlying demand, isn't it? For data centers, it's the nonstop need for more digital infrastructure. For manufacturing, it could be things like reshoring efforts or specific government incentives pushing certain types of factories. These sectors often have strong fundamentals that can maybe weather some of these cost bumps.
And Ken Simonson from the Associated General Contractors, he added that we'll probably still see significant spending on infrastructure, right? Highways, rail.
Yeah, highways and rail, and potentially the build-out of broadband internet in underserved areas too. Those tend to be longer-term, often publicly funded projects.
With more built-in financial backing, perhaps, less reactive to short-term market swings?
Exactly. They often have dedicated funding streams, making them less susceptible to the immediate ups and downs of private investment. So yeah, while some parts of construction might face real challenges, others, especially those with strong public backing or fundamental demand, could keep humming along.
Okay.
Ultimately, though, as Basu pointed out, how the market reacts to all this, how businesses actually adjust their plans, that's going to be the real test. It'll tell us a lot about this new trade environment we seem to be entering.
Okay, so trying to bring this all together, it really sounds like these new tariffs, even with those reported exemptions on key materials from the reciprocal duties, they still pose some pretty significant potential risks.
Definitely seems that way.
We're looking at, well, the strong likelihood of continued increases in material costs, driven partly by those tariffs already in place and just broader market stuff. There's a real concern about a slowdown in future investment, especially in those privately funded non-residential projects.
Yeah, that seems plausible.
And we absolutely cannot overlook the potential for some major challenges in the labor market, both potential layoffs and just the availability and cost of skilled workers.
And it's just so vital to remember, like we said, while those reciprocal tariffs might not hit certain materials directly, the existing ones on steel and aluminum, they're still very much in play.
Right.
Plus, you add in those potential indirect impacts through the supply chain and these looming questions around labor.
Yeah, the industry is definitely facing a complex and potentially quite challenging period ahead. It really is. This has been a crucial deep dive trying to untangle a very complicated situation. Considering all these potential headwinds, it really makes you wonder, what kind of innovative solutions or adaptations might we see? What will the construction industry come up with in the next months and years to try and navigate these risks? Are we going to see a bigger push towards, say, alternative building materials? Could things like modular construction or maybe increased automation play a bigger role, perhaps to offset labor shortages or cost hikes?
Interesting questions. Lots to watch.
Definitely lots to consider as things unfold. Thanks for exploring this with us today.